Hello friends, today we are going to talk about Indian banking system that has evolved in the last 75 years. It is time to take stock of that as we have celebrated 75th anniversary of Indian independence and 76th Independence Day on 15th of August 2022. We will be covering this big topic in a very short time. We will try to do that. We will reflect on this in 4 phases. Before independence, how the banking system was. Between 1947 and 1969, that is when nationalization of the banks have taken place. And from 1969 to 1991, that is before the reforms were undertaken. And from 1991 to 2022, how the banking system has developed. So these are the 4 broad phases. Before independence, banking system in India in fact has developed very well. We can find the mention about the banking system even in Arthashastra written by Kautilya way back in 325 to 275 BC. But the formal banking system started in India by formation of Bank of Hindustan in 1770, which functioned up to 1832. Simultaneously, presidential banks were established in Bay of what we call Bank of Bengal in 1806 and Bank of Bombay in 1840 and Bank of Madras in 1843. These 3 presidential banks have functioned and they have been converted into Imperial Bank of India in 1921, which had a hybrid role of a central bank and a commercial bank. So it was functioning in both ways. But on the recommendations of Hilton Young Commission in 1925, the Reserve Bank of India Act was passed in 1934, as a result of which the Central Bank of for India was formed. That is, Reserve Bank of India has started functioning from 1st of April 1935. So that was how the banking system was before independence. Now 1947 to 1969 is also having a lot of significance as the banking system has developed during that time. If you take stock of the state of banking in 1947, there were 97 scheduled commercial banks and about 557 non-scheduled commercial banks and 395 cooperative banks. So there were a large number of banks, 1049 banks, but the deposits were very less, only 1261 crores and advances were 425 crores. So that was the data as far as 1947 is concerned. And but the biggest landmark that has taken place is Imperial Bank of India, after Reserve Bank of India has started functioning, was converted into State Bank of India in 1955 by passing SBI Act. In fact, State Bank of India has thus become the first public sector bank in India owned by the government. Then came phase of need for nationalization. Now, it was observed that all these private banks which were operating at that time, they were mobilizing deposits from all over India, wherever they had branches at that time, because the number of branches were very low. But whatever was the number of branches at that time, they were lending only to big houses, business houses and owner-driven entities. So that was the weakness of the banking system. And when 5-year plans were rolled out in India, it was necessary to revamp the banking system to ensure that the credit flows to hinterland to develop Indian economy from the grassroots level, that is farm sector, small scale industries at that time and small businesses and industrialization. Everything was to be funded through the banking system. And since the banks were not lending, so social control on banks was introduced in 1967 to ensure the equitable distribution of credit by the banks. But it did not make much of difference, and In 1969, there was a necessity that nationalization is to be done to ensure that the banking system expands and it provides credit to fund growth. So as just before nationalization, in June 1969, there were 73 banks with 8,187 bank branches, and 17% of branches were in rural areas, and the total deposits were only 4,646 crores and advances were 3,599 crores. That is the state of banking as far as 1969 June is concerned, where the banks were nationalized on 19th of July 1969. So after the nationalization, there were rapid changes in the policy prescriptions, and Reserve Bank of India also became activated, and the government of India was also very keen that the banking system should gear up to meet the developmental needs of the country, and as a result of which lead bank scheme was introduced in 1969, and state level bankers committee was formed in 1971. Priority sector lending norms were designed in 1974 and introduced in the banking system. Of course, in the beginning, only 33% of credit used to go to priority sector. Now 40% goes to priority sector. So that was the state to ensure that the credit is channelized to agriculture, industry, small scale industries, and certain identified sectors of the economy. Regional rural banks were formed in 1975, and they have supplemented the roles of the banking system. And Deposit Insurance and Credit Guarantee Corporation of India was also formed in 1978, and NABARD was formed in 1982. These institutions, which came up as to support the banking system, have played a very key role in taking the banking to masses. So there was a lot of rapid expansion of bank branches, and by 1990 there were rapid growth in the branch network, and the number of branches have reached 59,752 in 1990 as against 8,167 in 1969. So that was the rapid growth of number of branches, and 58.2% of bank branches were located in rural areas as against just 19% at the time of nationalization. So that was the state, and the bank deposits were 28,609 crores and credit was 17,352 crores. So at the time, new economic policy was adopted and banking sector reforms were started. The number of bank branches have increased very substantially. Then came the reforms. The reforms, as we all know very well, on the recommendations of Narasimhan Committee 1 and Narasimhan Committee 2, and also there were a lot of other committees which have made different kinds of positive recommendations, as a result of which banking system has adopted internationally accepted prudential norms, and income recognition and asset classification norms were introduced. Capital adequacy ratio was introduced, and technology was adopted at a very faster pace. That is what we see anytime banking and anywhere banking, and technology driven alternate delivery channels have developed very fast, and ATM network, what we see today, and mobile banking, internet banking, and a lot of new banks, private banks were formed. But the big difference that came up was when NPCI was formed by Reserve Bank of India in 2008, which brought Rupay Cards in 2012 and UPI app in 2016, which made a very big difference to the digital banking system in India. And the private banks, in collaboration with the public sector banks and differentiated banks which were formed on the recommendations of Nachikeet Committee, that is small finance banks and payment banks, fintech companies, NBFCs, all these have galvanized the banking system and taken it to the level where we see today post to the reforms. So in order to take the reforms to the next level, there was Gyan Sangam, which was held in 2015, which gave rise to implementation of Indradhanush, that is a 7-pronged reform strategy which was implemented in public sector banks. And public sector banks had a different governance system after introduction of Indradhanush scheme. And then came the large scale consolidation of the banking system. Beginning from 2017 to 2020, the number of public sector banks which were 26 in 1991 were brought down to 12 by April 2020. So a lot of rejig of public sector banks have taken place, and public sector banks have become very strong pillars of growth as far as penetration in the rural areas are concerned, and as a result of which we find that the number of bank branches reached 1,51,320 by March 2022, and number of ATMs have increased to 2,15,061, and POS terminals, that is point of sale terminals, which we use for the purpose of making payments through credit cards and debit cards, they have increased to 60,70,142. So that is a massive infrastructure which has been built, and as a result of introduction of Rupay cards and then Visa card and other cards which are in the market now, the number of debit cards have increased to 917.6 million, that is about 92 crore debit cards are in the banking system now, and credit cards are 7.36 crores, that is 73.6 million. And bank deposits have increased to 169 trillion rupees, and credit has reached 123 trillion. So a substantial reach as far as the banking system is concerned, and as a result of which the financial inclusion index of RBI has reached 56.4 in March 2022 when compared to 43.4 in 2017, and the digital payment index has reached 349.30 against 100 in March 2018. Then there was another big change which has come in 2017. Ease reforms were introduced by the government in collaboration with Indian Banks Association and Boston Consulting Group. A metrics for smart banking was introduced, which is known as ease reforms, that is enhanced access to service excellence. That was the thing which was introduced, and the form of ease reforms were gradually reformed, like ease 1, ease 2, ease 3. So every year the format of ease reforms were fine-tuned, and now ease 5 is in operations. So when we look at the holistic view of the banking system from 1947 to 2022, that is 75 years of journey, we have reached a substantial stage as far as the banking spread is concerned. And now as per the World Bank data, 80% of Indian adults are having bank accounts, but the only differentiating factor is we are still very low as far as penetration of credit is concerned. Our credit to GDP ratio is just 56%, whereas many of the countries are having more than 100%. So it is time for us to introspect as to how to expand the credit, and that is one of the reasons why the consolidation in the banking space has taken place, and the big private banks are coming up to see that credit expands, and only one bank, that is State Bank of India, is in top 100 banks of the world, whereas we need to have more number of banks in the list of 100 banks globally. So we will see more of banking as we move towards achieving 5 trillion economy, on way to make it 10 trillion by 2030. So let's look for more aggressive and more purposeful banking that will be unfolded in the next 2 to 3 years to come. So we will talk more about the developments in the banking system in our next editions. Till then, thank you so much for viewing, and I would request you to share this, subscribe, and put your comments in the comment box so that we can be able to talk to each other and make improvements as we go forward. Thank you very much. All the best, and Jai Hind.